Welcome back to Tech Stock Insights. Ready for another deep dive. This time, we're looking at NVIDIA's Q3 FY25 earnings report.
Absolutely, and it's a big one. This report, plus all the documents they released alongside it, paints a really interesting picture, not just about their performance, but about their strategies and where they think things are going.
So we're talking about the world of accelerated computing and AI.
You got it. And NVIDIA is right in the thick of it. Okay, so we've got the earnings report itself, then a whole bunch of supporting stuff. What's the big takeaway here?
Yeah, where do we even begin with something this massive?
Well, the headline is, NVIDIA's killing it. Record revenue, $35.1 billion.
Wow, 94% jump year over year, isn't it?
Yeah.
That's not growth. That's a whole other level.
Exactly. But revenue is just one number. We got to see what's behind it. And the answer is data centers.
Ah, data centers. So those massive server farms we hear about, powering everything from cloud computing to, all that AI stuff.
Precisely. Their data center revenue went up 112% year over year. It's all driven by demand for their Hopper computing platform.
Hopper, right. That's specifically for AI applications, if I remember correctly.
You got it. And what's really interesting is it's not just about raw power anymore. It's about the right hardware and software to run all these crazy, complex AI models and applications.
So NVIDIA is basically powering the whole AI revolution, or a big chunk of it at least.
You could say that, yeah. Their Hopper H200-powered instances, those are available now on all the major cloud platforms. Think AWS, CoreWeave, Microsoft Azure, all of them.
Okay, so those big names are all in. Makes sense. Everyone's trying to integrate AI into their products, services, whatever they're doing. They need the horsepower to make it happen. But when we say AI applications, what are we actually talking about?
Oh man, everything. Large language models like ChatGPT, the ones everyone's talking about. Then you've got image recognition, recommendation systems, drug discovery platforms, financial modeling, you name it.
So AI is everywhere, is what you're saying.
Pretty much. And it's touching almost every single industry you can think of. And who's providing the tools? NVIDIA.
So they're not just selling chips, they're selling a whole vision of the future. A future where AI is, well, everywhere.
Exactly. They're the ones selling the picks and shovels for this AI gold rush. And it's not even just hardware. They're investing heavily in software, too, and all those development tools that make it easier for other companies to build and use AI applications.
Okay, so data centers are booming, AI is the fuel, and NVIDIA is the engine. But they're also a gaming company, right? That's kind of how a lot of people know them. How's that side of things looking?
Yeah, gaming is still a core part of who they are, and it's doing very well. They saw a good increase in gaming revenue this quarter, both compared to last quarter and also compared to the same time last year.
But is it getting overshadowed by this whole data center boom? Is gaming still a big growth driver for them?
It's definitely not their biggest revenue generator anymore, no, but it's still a big part of their business, and it's still growing. Actually, this quarter marked the 25th anniversary of the GeForce 256.
25 years. Wow, that's ancient in tech years. What's so special about that?
Well, the GeForce 256 basically launched the whole modern gaming industry as we know it, set the stage for the kind of amazing graphics and experiences we have today.
Okay, so more than just nostalgia then.
Oh, for sure. And what's fascinating is a lot of the technology they developed for gaming, think of parallel processing, high-performance graphics, all that's all essential for AI now.
So in a way, they were training for the AI marathon without even knowing it.
Exactly. Gamers were demanding more and more, pushing NVIDIA to innovate, and that accidentally laid the groundwork for the AI revolution. It's a wild connection.
Speaking of which, they mentioned RTX AI PCs in the report. What are those all about?
Those are PCs designed to use NVIDIA's RTX technology. Basically, it uses AI to boost graphics, make gaming experiences way more realistic and immersive.
Ah, so it's like bringing AI to everyone, but through gaming. Clever.
Exactly. And these RTX AI PCs, they're not just for gamers. They're powerful enough to handle other AI-powered stuff too. Video editing, image processing, even some light machine learning tasks.
So anyone with one of these could potentially be running AI applications at home.
To some extent, yeah. Obviously, not as powerful as the huge servers they use in data centers, but it's a glimpse into what's coming. AI becoming something everyone can use.
That's pretty exciting. Okay, so booming data centers, healthy gaming business, AI-powered PCs for everyone. Sounds like everything's coming up roses for NVIDIA, right? But there must be some challenges too. They can't just keep growing at this insane pace forever.
You're right, they can't defy gravity, and one of their biggest challenges is definitely their supply chain.
What do you mean? I thought they were selling everything they could make. Isn't that a good problem to have?
It is a good problem in some ways, but it's still a problem. The demand is so high they're having trouble keeping up. They're investing a lot in trying to increase supply, but it takes time.
So, new factories, deals with new suppliers.
All that and more. New manufacturing capacity, finding new suppliers and contract manufacturers, and streamlining their operations to squeeze out as much efficiency as they can.
Makes sense. But surely there are risks with expanding so fast. What if demand suddenly drops off? They could end up with tons of excess inventory.
Yeah, that's a valid concern. They actually address that risk right in the report. They know they have to balance this growth with managing their supply chain carefully.
So they're walking a tightrope.
You could say that. They're confident in the long term, but they're also being realistic.
And it's not just the supply chain, right? The whole global economic situation is pretty shaky right now. Inflation, interest rates going crazy, geopolitical tensions, all of that must be impacting NVIDIA too.
Absolutely. The report talks about those macroeconomic factors and their impact. Things like the global chip shortage, energy costs going up, the war in Ukraine, all of it creates uncertainty, makes the market volatile.
And let's not forget about those U.S. government export control measures on AI products. NVIDIA does a lot of business in China. Those must be a major headache for them.
You're right, that's a huge risk factor. The report talks about how those measures could limit what they can sell in some key markets, could hurt their revenue and profitability.
So they're caught in the middle of this U.S.-China tech war.
Pretty much, yeah. It's a tough situation to navigate. They got to follow U.S. rules, but also try and keep things good with their business partners in China.
Tough balancing act. It's a reminder that even a company as successful as NVIDIA isn't immune to this kind of global stuff. Speaking of which, they mentioned the conflict in Israel too, didn't they?
Yeah, they acknowledge it as a potential source of disruption. They have a large workforce in Israel, around 4,300 employees, mostly focused on networking products. Their supply chain hasn't been badly hit yet, but they emphasize that they need to watch it closely.
There's lots of uncertainty on the horizon. But even with all that, their financial performance is still amazing. Let's talk about the money stuff. What stood out to you in the financials?
Their cash flow is incredibly strong, just tons of cash coming in from their operations. And they're being smart about it, investing in growth, buying back shares, paying dividends, using that cash strategically.
Okay, break that down for me. What does that say about how healthy they are financially and about their commitment to their shareholders?
Well, strong cash flow is a sign of a healthy business, right? They're making more cash than they're spending, gives them flexibility to invest, ride out any economic storms, and reward their shareholders.
So they're not just hoarding cash, they're actually using it wisely.
Exactly. Strengthening their business, creating value for their shareholders.
And what about those share buybacks and dividends you mentioned? How does that all work?
Share buybacks. That's when a company uses its own cash to buy back its own shares from the market, reduces the number of shares out there, which can boost earnings per share and make the remaining shares worth more.
So it's a way to return value to the shareholders.
Exactly. Basically, they're saying, we believe in our company so much we're willing to buy back our own stock.
And what about dividends? Are they paying those too?
Yep, they're paying a regular dividend to shareholders. It's like a little bonus you get for owning the stock.
Another way of sharing the profits then.
Exactly. Shows they're committed to returning value to shareholders both in the short term and long term.
Okay, so firing on all cylinders, managing risks, taking care of their shareholders. Sounds like they've got it all figured out. But let's get into the nitty-gritty of the numbers. There's got to be more to the story.
Absolutely. The report is packed with details, and those can give us a much deeper understanding of how they're really performing and what their strategy is.
All right, let's dive into those details then.
Sounds good. For instance, there's a whole section on their equity awards. Those are basically stock options they give to employees. It's fascinating how they use them to attract and keep talent, but also how they make sure it doesn't hurt the value for existing shareholders.
Trying to keep everyone happy. What else jumps out at you?
They go deep on their cost structure, breaking down expenses into categories like research and development, sales and administration, even manufacturing costs.
So it's about seeing how efficiently they're running things. What are they investing in? Where's the money going?
You got it. And it's not just about spending, it's also about managing risk. For example, they're super transparent about how they're handling potential inventory issues, especially if demand drops. They even talk about inventory provisions and impairments in the report.
Okay, you lost me there. What are those, and why should I care?
Well, imagine they have all these warehouses full of chips they're planning to sell. But what if demand suddenly tanks and those chips become obsolete or less valuable? That's where inventory provisions come in. It's money they set aside to cover potential losses if they have to sell stuff at a discount or even write it off entirely.
So like an insurance policy in case their chips go bad.
Exactly. A smart way to manage risk, especially in tech where stuff gets outdated so quickly.
And what about impairments? That sounds even worse.
Impairment basically means they've had to lower the value of something, like their inventory, because it's not worth as much as they thought it was. Maybe they overpaid for something or the market changed and their inventory is not worth as much anymore.
So it's like taking a hit to their profits.
Yeah, it can impact their bottom line. But the important thing is they're being upfront about it. They're not hiding anything. And that's what builds trust with investors.
Transparency is definitely key. And speaking of transparency, they also talk about their investments in other companies, specifically privately held ones. What's the deal with that?
Things get really interesting here. These are like their strategic bets on the future. They're investing in companies developing cutting-edge technologies or shaking things up in existing markets.
So they're looking at the bigger picture and trying to position themselves for future growth.
Exactly. And the way they value these investments in private companies, it gives you insight into their long-term thinking. They're not just chasing quick profits, they're playing the long game.
That's like they're playing chess, thinking several moves ahead.
Exactly. And they're not afraid to take risks, but they're being smart about it, spreading their bets across different companies and technologies.
This deep dive is already revealing a lot about how NVIDIA operates.
Yeah.
What else is jumping out at you from these financial statements?
One thing that caught my eye was their discussion of these things called derivative financial instruments, specifically something called foreign currency forward contracts.
Okay, I'm lost. What are those?
Think of it this way. NVIDIA does business all over the world, right? So they deal with different currencies. But those exchange rates can fluctuate, which can mess with their profits.
So if the dollar gets weaker, their earnings could take a hit.
Exactly. So to protect themselves, they use these foreign currency forward contracts. It's like locking in a future exchange rate today, so they know exactly how much they'll be paying or receiving in a foreign currency, no matter what happens with exchange rates later on.
So it's like a safety net.
Exactly. It's a small detail, but it shows they're proactive about managing those financial risks. It's a sign of a well-managed company.
It's like peeling back the layers of an onion, and each layer reveals a new level of complexity and strategy.
I like that analogy. And speaking of peeling back layers, their discussion of revenue from contracts that last longer than a year, that's another good example. It shows they're building those long-term partnerships, securing a steady stream of income.
So it's not just about one-off deals, it's about those lasting relationships with their customers.
Exactly. And it's not just about the money coming in. They also talk about what they're obligated to buy for inventory. It highlights their dedication to making sure they can meet future demand.
It's a delicate balancing act,
Right.
trying to predict what the demand's going to be, but also be prepared for the unexpected.
You're absolutely right. And they're not just guessing. They use complex forecasting models, analyze the market, and work closely with their customers to figure out how much inventory they need.
So it's a mix of art and science.
That's a great way to put it. It really showcases their expertise in managing a complex global supply chain.
And then there's the legal stuff to deal with. The report mentions some legal proceedings they're involved in.
Yeah, lawsuits are kind of par for the course when you're in a fast-paced industry like tech. NVIDIA's approach seems to be cautious, but realistic.
So transparent about the risks, but also not overly pessimistic about the potential impact.
Exactly. It's all about finding that balance, and they're doing a good job of it.
And then there's those U.S. government export controls we talked about earlier. They go into a lot of detail about how those could affect their business, particularly in markets like China.
It's a critical point. They're clear about the fact that if the U.S. changes those export controls further, it could hurt their competitive position. It's a complex situation, and they're right in the middle of it.
Sounds like they're walking a tightrope, balancing U.S. regulations with the demands of the Chinese market.
Exactly. And they're not just sitting back and waiting to see what happens. They're actively engaging with policymakers, industry groups, and their customers to try to find solutions that work for everyone.
It's a delicate diplomatic game.
It really is. And they're playing it well, using their technical knowledge, business savvy, and even some diplomatic skills. It's impressive.
They also mention the conflict in Israel, right? It's a reminder that what happens on the other side of the world can impact even a company as big as NVIDIA.
Absolutely. The global economy is so interconnected. They talk about how the conflict could affect their product development, their operations, and their revenue. They're taking a proactive approach, monitoring the situation and assessing those risks.
So it's not just about managing their own internal stuff. They have to keep an eye on the big picture, too.
Exactly. They have to anticipate those disruptions, figure out what the impact might be, and adjust their strategies accordingly. It's like playing chess on a global scale.
It's a complex and ever-changing world, and NVIDIA is navigating it skillfully.
Indeed. And that's why we're spending so much time digging into this report. It's not just about the numbers themselves, it's about understanding the context, the strategy, the risks that are shaping NVIDIA's journey.
And it's a journey that's fascinating to follow, both for investors and for anyone who's interested in where technology is heading.
Absolutely. NVIDIA is at the forefront of some of the most transformative technologies out there, and their story is a glimpse into the future.
I couldn't agree more. So we've covered a lot of ground so far, from the big picture down to the finer details, but we're just getting started. There's so much more to explore in this report.
I'm ready to keep digging. Let's see what else we can uncover in the next part of our deep dive.
Excellent. I'm sure we'll find even more fascinating insights as we go deeper into NVIDIA's world.
I'm confident we will. Until next time.
See you then.
So we were starting to get into the details of their expenses, right? Breaking them down by category. It's not just about that big revenue number. It's about how well they're managing the money they're bringing in.
Yeah, like we were saying, it's like looking under the hood.
Yeah.
Seeing how they're using those resources in different parts of the business.
Exactly. And you'll notice in the report, they really break down those costs. Research and development, sales and marketing, even general administrative costs. It's all laid out. This lets you, as someone who might be interested in investing, see where their priorities are.
Right, so we can see how they're allocating those resources.
Precisely. And one thing that really jumps out is how much they're spending on R&D. It's a lot. Which, it makes sense. They're in a field where innovation is everything. They even break it down further, showing how much goes to AI, how much to accelerated computing, how much to gaming tech. It helps you see where they think the biggest growth potential is.
So they're not just sitting back and enjoying the ride. They're actively investing in staying ahead of the game.
Right.
But R&D is just one piece, right? What about the cost of just keeping the lights on, running the business day to day?
Right, that's where those sales and administrative expenses come in. All the stuff like marketing campaigns, salaries for their sales teams, customer support, all the behind-the-scenes things that keep the machine running.
And they give us a pretty granular breakdown of all that in the report, don't they?
They do, and it's worth looking at closely because it tells you how efficient they are. Are the marketing campaigns actually working? Are they keeping their sales team lean and focused? These are the questions investors want answers to.
It's like, yeah, you can look at a shiny car, but you also want to know the engine's in good shape.
That's a perfect way to put it. You got to make sure that engine is running smoothly. And speaking of running smoothly, remember we talked about provisions for inventory and those excess purchase obligations?
Yeah, we did touch on that, but it's probably worth revisiting. That kind of financial jargon can be hard to grasp if you're not a finance expert.
Of course. I'm happy to explain it again. Imagine you're running a bakery. You have this huge order for birthday cakes coming in. So you buy all the ingredients, right? Flour, sugar, eggs, everything you need. But then what if the order gets canceled last minute? You're standing with all that stuff, and it might go bad before you can use it.
Okay, I'm starting to see the analogy here. Those ingredients are like NVIDIA's inventory, all the chips and components they've bought or have promised to buy.
Exactly. And just like a baker needs to think about what happens if ingredients go bad, NVIDIA has to think about what happens if some of their inventory becomes outdated or loses value if demand drops. That's what provisions are comment. They're setting aside money to cover potential losses.
So it's like a safety net for their business.
You got it. And those excess purchase obligations we talked about, that's like if the baker had contracts with suppliers to buy a certain amount of flour every month, even if they end up not needing it all.
So they're locked into buying a certain amount, even if demand takes a nosedive.
Right. And that can be risky, especially in a market as unpredictable as semiconductors. But the important thing is, they're not ignoring those risks. They're monitoring the market, adjusting production plans, and making those provisions to cover potential losses.
So they're being cautious, but not panicking.
Yeah.
They're still optimistic about the long-term growth.
Yeah, that's the vibe I get from the report. Aware of the risks, but confident they can manage them well.
Okay, so inventory risk is one thing. But what about the big, scary T-word taxes? How are they handling those obligations?
Oh, they don't shy away from that in the report. They break down their income tax expense by jurisdiction, meaning they show exactly how much tax they're paying in every country they do business in.
So no hiding anything, full transparency about where the profits are coming from and what they're paying in taxes.
Exactly. And they even explain why their effective tax rate, the overall percentage of their profits that goes to taxes, has changed.
This is where it can get super complicated, right?
Yeah.
Every country has different tax laws, and they can change all the time. How do they keep up with all that?
Oh, it's a real headache. But they have a whole team of tax experts who keep track of global tax laws and make sure they're playing by the rules everywhere.
So like a team of expert navigators guiding them through the choppy waters of international tax law.
Exactly. And it's not just about minimizing their taxes either. They're also thinking about their reputation. They don't want to be seen as doing anything shady or unethical.
Right, it's about balancing the books and their public image.
Exactly. Transparency builds trust.
All right, we've talked taxes, but what about cash flow? That's the lifeblood of any business, especially one growing as fast as NVIDIA.
Yeah, how are they making and using cash?
Their cash flow statement is like a treasure map. They break it down into three main parts: cash flow from operating activities, cash flow from investing activities, and then cash flow from financing activities.
Okay, so 3 buckets of cash. Which one is the most important for investors to understand?
Probably the cash flow from operating activities. It shows you how much cash is coming from their core business selling products and services. You take that, and then you subtract the cash they're spending on things like manufacturing, marketing, research, and development.
So it's a way to see how profitable they really are at their core. Exactly. And NVIDIA, they're generating a ton of cash from their operations. It's been positive and growing steadily over the past few years.
That's a healthy sign.
Yeah.
It's not just growth on paper. They're actually bringing in cold, hard cash.
Precisely. And that means they have the freedom to do all sorts of things. Invest in more growth, buy back shares, pay those dividends, even weather a recession if one comes along.
So they're not just sitting on that cash, they're putting it to good use.
Exactly. That's what investors want to see, a company that's making money and using it wisely.
Okay, so we've covered cash from operations. What about those other two categories?
Cash flow from investing activities shows you how much cash they're using for things like buying equipment, acquiring other companies, investing in other businesses.
Ah, so that's about how they're setting themselves up for future growth.
You got it. And NVIDIA is investing a lot in their future. They're building new factories, pumping money into research and development, even buying companies that fit their strategic goals.
Playing the long game, making those big bets on what's coming next.
Exactly. And they're doing it carefully, strategically. That's reassuring for investors.
Okay, operating cash flow, investing cash flow. What about that last one? Financing cash flow.
That one shows how much cash they're getting from things like debt and equity, and how much they're using to pay down debt, buy back shares, and pay dividends.
So basically how they're managing their overall capital structure.
Precisely. And NVIDIA is very careful about how much debt they take on. They have very little debt right now, which gives them a lot of flexibility.
Not over-leveraged then. That's a good thing, right?
Absolutely. They're managing debt wisely and being strategic about how they return value to shareholders. Buybacks and dividends, remember.
Right. It sounds like they have a very balanced and disciplined approach to managing their finances.
They do. And you can see it reflected in their performance. Strong financial results, a healthy balance sheet. But there's even more to unpack. Those notes to the financial statements, those are gold mines of information.
The fine print of the financial world.
Exactly. But it's important fine print. It explains their accounting policies, their big accounting estimates, lots of crucial details.
So it's not just about the numbers themselves, it's about understanding what those numbers are based on.
You got it. The more you understand about those assumptions and judgments, the better decisions you can make as an investor.
Okay, so we've really dug into these financials. What are the main takeaways for our listeners?
Well, the main thing is NVIDIA is financially solid. They're profitable, generating lots of cash, and creating value for their shareholders. They're disciplined, strategic, and transparent about their finances and the risks they face.
So it's not just hype about AI and the metaverse.
Yeah.
There's a real financial muscle behind it.
Exactly. And that's what makes them so interesting as an investment. They're leading a rapidly growing industry, and they've got the financial strength and the management expertise to take advantage of that.
We talked a bit about their investments in other companies, those non-affiliated entities. It's kind of mysterious because it involves private companies. Can we get back to that?
Absolutely. Those investments are fascinating because they show us where they think the future of tech is going. They're not just throwing money around, they're picking companies that fit their strategic vision.
It's like they have their own venture capital arm scouting for the next big
Right.
thing.
And they're not just providing money, they're offering their expertise, their connections, helping these companies succeed.
So everybody wins. NVIDIA gets a piece of the future, and these startups get the support of a tech giant.
Precisely. It shows how committed they are to innovation. They're not just building their own stuff, they're nurturing a whole ecosystem of innovators.
It's like they're building an alliance of companies, all pushing the limits of technology in their own ways.
You got it. And that's what makes NVIDIA so exciting to watch. They're not just following the trends, they're making the trends.
This deep dive has been really insightful. We've covered so much. Their amazing revenue, their dominance in AI, all the intricacies of their financials, those strategic investments they're making.
And we're just scratching the surface. There's always more to uncover when you're looking at a company as complex and dynamic as NVIDIA.
Absolutely. It's a story that's still unfolding. NVIDIA is always changing, innovating, pushing the boundaries. We'll definitely have to keep coming back for more insights as things develop.
For sure. It's a privilege to witness a company like this shaping the future of technology.
It's really impressive how they managed to stay on top of all those global factors and keep pushing forward with innovation and their financial goals.
It really shows you what strong leadership and strategic thinking can do. They're not just reacting to what's happening, they're anticipating it, planning for it.
Okay, so we've looked at the financials, the strategic investments, even touched on their ESG stuff and the whole geopolitical landscape. But the big question everyone wants to know is, what's next for NVIDIA?
That's where the Q4 FY25 Outlook section comes in. And it's pretty exciting stuff.
All right, don't keep me in suspense. What are they projecting? Are they expecting to keep up this incredible growth?
Oh, they are. Get this. They're projecting revenue of $37.5 billion for Q4, plus or minus 2%. That's, think about it, more than double what they made in the same period last year.
Wow, that's insane. They're basically saying this phenomenal growth is going to continue.
Exactly. And it's not just a one-time thing. They're seeing continued strong demand for those data center products, and they expect sustained growth in gaming and professional visualization, too.
So the AI revolution isn't slowing down anytime soon, and NVIDIA is right in the driver's seat.
Could have said it better myself. They're not just along for the ride, they're pushing the whole thing forward. Always innovating, seeing what else they can do with AI.
Speaking of innovation, they mentioned ramping up production shipments of their Blackwell architecture in the next few quarters. Fill us in on that.
Blackwell. That's their next-generation GPU architecture. Even more powerful than Hopper. It's built for those super demanding AI workloads. They're expecting it to really boost their data center business.
So if Hopper's the engine of the AI revolution, Blackwell's the rocket booster.
Perfect analogy. Blackwell is going to take AI to a whole other level.
But they did mention possible supply constraints, right? Even with all their efforts, it sounds like keeping up with demand is a huge challenge.
Oh, you're right. They were upfront about that. They're saying Blackwell demand is likely to be higher than supply for a while. Could be several quarters.
Well, a good problem to have, in a way. Everyone wants what you've got, but you can't make enough of it.
Yeah, it shows how strong they are in the market, but also means they're going to have to manage expectations, make some tough choices about who gets those chips.
It's like having a hit product that everyone's clamoring for, but you just can't keep up with the orders.
Exactly. And that can be frustrating for customers who are ready to jump on the latest and greatest tech.
But it also creates that sense of scarcity, right?
Yeah.
Makes it even more desirable.
True. It's a classic marketing principle. The less there is, the more people want it.
So, big picture, it sounds like NVIDIA is in a really strong position. Their finances are rock solid, they've got exciting products coming out, and they're leading the AI revolution.
Couldn't agree more. They're definitely a company to keep your eye on. Their future looks bright.
This deep dive has been incredibly insightful. We've covered so much ground, from the nitty-gritty financials to the big trends that are shaping their business.
And we've only scratched the surface. There's always more to learn about a company as complex and fascinating as NVIDIA.
Before we wrap up, what are your final thoughts for our listeners? What are the key takeaways they should be thinking about?
Here's something to consider. NVIDIA's success isn't just about chips and GPUs. It's about how AI is changing everything. It has the potential to revolutionize every industry we can think of. And NVIDIA is leading the charge. Their performance shows just how big the opportunities are.
I love that perspective. It's not just about one company, it's about understanding where technology is taking us.
Exactly. And it's a story that's still being written. We'll be here to help you understand it as it unfolds.
Well said. Thanks for joining me on this deep dive into NVIDIA's Q3 FY25 earnings report. I hope our listeners found it valuable.
Always a pleasure to share my insights.
And this is just the beginning. We'll be back with more deep dives as NVIDIA's story continues. Be sure to subscribe to Tech Stock Insights for more insights into the world of tech. And we want to hear from you. What stood out to you from this deep dive? Keep the conversation going.
We're all learning together here, and your thoughts and perspectives are important.
Thanks for tuning in.
Until next time.